Hello and welcome to myfinanceteacher.org. In this video I want to have a quick chat about gold, silver and gold miners. Before that, a quick digression. If you are watching this on YouTube, consider subscribing to myfinanceteacher.org for timely updates, as the public videos on YouTube are significantly delayed and some of the members-only content is not posted publicly at all. On the other hand, if you've joined myfinanceteacher.org recently, I will send you a confirmation email for new post notifications, basically notifying you when a new post is made at myfinanceteacher.org. If you subscribe through the confirmation email, you'll not have to check from time to time if there's been a new post at myfinanceteacher.org. Looking at gold, what do we see on the chart? Over the last several weeks, it looks like gold is forming a symmetrical triangle, unlike an ascending or a descending triangle. A symmetrical triangle usually has an equal chance of breaking either to the upside or to the downside. Despite the red candle on Friday, gold still hasn't broken this uptrend we've seen since the beginning of May. So the chances are still pretty good that on the 1st of May we have seen the first short-term daily cycle low on gold, and that daily cycle lasted for 42 days. That is a positive sign, because if we are in the second daily cycle, instead of continuing within the declining phase of the first daily cycle. So if we're in the second daily cycle, the chances are better that the breakout of this triangle is going to happen on the upside, and with the Bollinger Bands narrowing, usually a breakout of narrow Bollinger Bands is relatively strong. So gold might easily have enough strength to push, say, up to 1800. On the other hand though, if the break from this triangle takes place to the downside, a couple of support zones underneath would be at 1650. We have two supports coinciding there, this 50-day moving average and the recent high at the end of March. And the support zone below that is just below 1570. Let's just call it 1570. That's based on a couple of technical points. Firstly, a couple of bottoms we saw in the beginning and in the end of March. And secondly, if the triangle does break on the downside, usually a measured target for the break is the height of the triangle, which is around $100. So if we do break from here, let's say at about 1680, $100 down will bring us nearly to that support zone at about 1570. If that were to happen, I think 1570 or a little bit higher than that would be a really nice buying opportunity on gold moving into the second short-term daily cycle, as the ongoing intermediate cycle is still relatively young. It's been going on for 49 days. And with Saturday today, it's actually 50 days. Given that these usually last for half a year, we should generally observe an uptrend in the first 2 or 3 months. So although dip down to 1570, 1580 can be a really good buying opportunity, personally, I'm not counting on that. As I mentioned in many of my previous videos, I'm already 80% allocated in precious metals. And if the break does actually happen on the downside, I'll have to devise a strategy and see if I want to take temporary profits on at least part of the position once I see the breakout. Stupidly enough, at the moment I don't have a stop loss on my precious metals related positions because we are still early in the intermediate cycle. But generally having no stop losses is a bad idea, so maybe I should consider them. Going back to the breakout from the triangle, for these two scenarios, a breakout to the upside or a breakout to the downside, in my opinion, the split of probabilities would be at about 60% chance of a breakout on the upside and only about 40% chance of a breakout on the downside. Compared to my last video, I'm just a little bit marginally more inclined to think that the breakout is going to happen to the upside. Some of the reasons that tell me that it's maybe a little bit more likely to see a breakout on the upside is the behavior of miners and silver. Although we saw a sizable red candle on gold on Friday, GDX didn't move down that much. GDX basically closed at the same price where it opened on Friday. We also see a positive divergence on GDX versus gold. Gold is showing us lower highs within this triangle. So for example, these recent highs on Thursday are lower than the previous highs at the end of April. Whereas looking at GDX, we see a positive divergence. The recent highs are slightly higher than what we saw at the end of April. And secondly, silver is also giving me a little bit of a confidence that gold might actually break on the upside. Silver gave us a green candle on Friday, although gold was down. So that is another positive divergence from silver. On silver, we also see somewhat of a similar triangle, with the difference being that silver seems to be breaking out of the upside of that triangle already. And with the Bollinger Band so narrow on silver, I think there is a good chance of a nice push up in silver coming up over the next couple of weeks. And although over the last several weeks silver was actually underperforming gold, as I mentioned in one of my previous videos, silver usually catches up in the later parts of the intermediate cycle. Here's a quick abstract from that previous video. Since December 2015, in 5 out of 8 intermediate cycles, silver was lagging behind gold in the first several weeks, 1 to 2 months, and only later silver was catching up and actually outperforming gold. So in conclusion, I'm still waiting to see how this triangle plays out. I think we are more likely to break on the upside. If I see a break on the downside taking place, I'll probably have to devise some strategy of what to do going forward. At the moment though, I'm still 80% in. Let me know what you think in the comments below. Make sure you have a good weekend and good luck in your trades.